So start that up, and then we'll get into TradingView here, and we can go over all the questions people wrote down as well as the ones you have. So I'm going to hop into the questions. I'll go to the top, and we'll just start there and work our way down. Are there pairs? And since in the recording you won't be able to see the Discord stream, I will just say it. So are there pairs not really affected by news that we can trade today or the day before FOMC? Not really that I am interested in. I'm not really sure on anything other than ES and NQ on how they really move prior to huge impact like that, FOMC, NFP, CPI, but I would rather just play a conservative and not do that. Go over my process when hopping onto the charts for one shot, one kill, but mainly scalping, kind of top down. For one shot, one kill, you use your model and flowchart, but still, question for mainly scalping, what are you looking at or for? Okay. So mainly what I'm looking for when I hop onto the charts is I want to look for a daily setup, right, that aligns with the weekly profile for the one shot, one kill. So what I'm looking for is a daily close. So I think Euro is a good example here. If we take a look at Euro, we'll give it one more day here. Right, we have displacement down. It retraces back into this fair value gap, this up close candle, and then you see how it forms a candle 2 closure. So should respect 0.5 of this candle wick if we're going to go lower, right? So all I'm looking for is, let's say we replay it to here, and let's say I open the charts in here, right? I see a candle 2 closure right here, and then that is my idea for price to then trade lower, right? And since this is Wednesday, we've consolidated, we took out Monday's high and Tuesday's high, right? And we have failure swings below, then it's possible to anticipate this move lower, right? And then, like I was saying, marking out 0.5 of this wick to then trade it lower. And if we wanted to follow the model here, like so, right? So really what I do when I hop onto the charts is I'm just looking for daily setups, right? So normally what I go through is I just cycle through the daily charts here. So I'll just look, see if there's any setups there, right? And if there's no closes that interest me, then I am not really interested in a one shot, one kill setup on the following day, right? Because if there's nothing that's interesting on the daily chart, if you can't anticipate the daily candle's direction, why would I be interested in going onto the lower time frame? If it's not clear on the daily, why do I think it's going to get more clear on the lower time frames, right? If I'm not sure on the direction. So really I'm just looking for a closure. So essentially my model. And then I think the question was for scalping, what do I do? Well, I still want to have a higher time frame trend or direction for when I'm scalping. So for instance, if I wanted to scalp in gold here, right? After we make a low and close over here, right? Then down close candle should be supported. It's fairly choppy in here, but I'm still wanting to align myself with the trend if I'm scalping. So if I'm scalping and the day is bright green, right? We have big green days here. Why should I be looking short until there is an hourly change in the state of delivery, right? Even if I'm scalping, right? Because the trend is still up. So hopefully that answers your question. Let me check the chat real quick. Yeah, we can go over an example of the 15 1-minute model or go through today. Let me get through some more of these questions. Seeing a lower time frame. Okay, yeah, we can talk about that. So the question was seeing a lower time frame projection from the higher time frame. So we can just hop into NQ for this example here, and maybe we'll go to the 5-minute or maybe 15, right? So we'll just clean the chart up here a little and we'll just talk about it. So you can see we sweep out this high, we have a candle. We don't have a candle 2 closure, right? So then candle 3 closure, candle 4 is the continuation here on the 15-minute. Now, how would I see the projection from the higher time frame? So sometimes you'll get to a 1-minute or a lower time frame and it's not clear. What can I use? Well, that's when you just understand what the structure actually looks like here. So you can see we made a high here, went down, made a low, made a high here, and then you can see a wick, right? So if we open, made a wick, and then higher, you know price went up, down, up, then it made a little high, or a low right in here, because we opened, made a high, and then lower, right? So if you know this from the higher time frame, you know the projection is that low to the high, so you can project out from that low to the high. And that's how you can see the lower time frame projection, which you can see is the same there, from the higher time frame, if that makes sense, right? So let's see if we can, there's not another real great example there, but hopefully that answers your question there. Just a bit of practice. And yeah, the Wi-Fi is better now that I am in Spain. But flow, that's just some practice. It's more useful. Let me see if I can find an example. It's more useful when you're like on the 1 minute and you have a very large manipulation, right? Like, I mean, we could, this isn't a great example of it. Let me see if I can find one that would be helpful. I mean, so maybe something like this, right? It's not even good because this candle went up then down. Yeah, but it's just trying to find one where it's actually useful. I guess we could do something like this, right? Let's say we were trying to project a high in here, right? Well, I know if price went up here, then closed, right? And then made a new high before a low, that my projection, I'll have a lower time frame swing point in here. So I can either just use the open there, or I can go from here to here. Oops, did that backwards. Right, and project that out. And then if we went to a lower time frame, I may have missed it because of it, but you can see we catch that little swing low, so that's the manipulation. So you can see that from the higher time frame, because if you understand the wicks and the open and high and low close, you know price went like this. I can draw it out. So since this candle opened here, it went up, down, right? I'm drawing this candle. Then price opens, makes a new high, comes down, right? And then on this candle, makes a high before going all the way down here, close, and then now going from this wick to that wick, right? And then lower, right? So you can start to draw out the higher time frames or the lower time frames there using the higher time frame, right? So hopefully that is helpful. Yeah, it just takes some practice. Once you start to do it, that's how, when you're on like the daily time frame, you can start to picture the lower time frames, right? Because you know, okay, price went up there, down, right? Then made that reversal, right? So then this down, up, that's a little retracement. So just little stuff like that. It takes a bit of practice. That's all it really is. All right, let me get to another few questions. How do you know if how do you know that price expanded to -2 to 2.5 or -4 to 4.5? I wouldn't say you know it's gonna go in one direction or the other. Like if I'm trading a reversal, so we'll just use the 1 minute reversal up here, or I'll go to like a 3. Right, so trading this reversal here. Since we're on the 3 minute, we'll use the 30 minute on the other side. How do I know if price, once it reaches here, is going to continue, right? Because we have a reversal candle there, right? 1, 2, 3. How do I know if it's going to continue? Well, with that, I want to look at the previous candle's closure, right? See how this closure is nice and very bearish, right? So that gives me the indication that as long as 50% of this is respected, right? And ideally here, if we were to reach back up, then we continue lower. Now versus something like, let's find one. Trying to find one that failed. We'll just use this as an example. Right here. So let's say we're trading this candle 3 closure here, right? We'll hop down to 3 minute or something. Let's say I was trying to trade this closure here. Were we on the 15? Okay, so I'll use the one. Go to that. So let's say I was trying to trade this candle closure here, right? And in this case, because we have such a large manipulation, I could use the lower time frames and realize that's the swing point, or just go to there, right? So we hit the 2 to 2.5. Now, how would I anticipate if it's going to go to the 4 to 4.5? Well, with that, I want to see the higher time frame closure. So with this, I'd want to see this candle close near the highs or strong bullish, right? But what happens? It closes like this, which is now forming a candle 2 closure bearish, right? So that is the indication where, okay, this may be the high to go lower, or at least to make a new low because of this candle 2 closure. Versus on the other example, let's say price closed up here or above these highs, well, then it's reasonable to anticipate price continuing higher, right? And that's just that continuation versus reversal. Let me check the chat one more time. Yeah, I will talk more about the intra-candle change in the state of delivery. And if you watch my past 2 live streams, sorry, let me grab some water. If you watch my past 2 live streams, I talked a lot about it in those. Okay, so we will talk about that in a minute. If you want to, let's throw it in here. Okay, let me get a few more questions. Backtesting session, we can probably work one of those in. For the H1 or fractal model, how to pick the right point of interest. How do you know if the point of interest will hold if I see a swing point? So mainly you want to focus on 3 different points of interest, right? And I'll just zoom out and clean up the chart here so there's less going on. And there are a few of those, right? And that would be the first one I would focus on, if I only had to choose one, would be a sweep of a high or a low, right? And so looking at that, right? If you're just marking out sweeps of highs and lows, right? You can see that keeps you out of a lot of swings that don't fail, or that fail, right? You know, you may miss some, but like right here, never reached the point of interest. Why would I be looking long? So yes, you missed that, right? But this one takes out both these swing points, goes lower. Now, really, it just comes down to trend and then with the swing points, right? Because if I'm wrong on my bias or trend, I can have a valid point of interest, right? Or that just fails, right? So let's say, for instance, this did sweep this low out. We have a valid order block and we formed a swing in here, right? That would make sense. But here, since we didn't sweep this out, don't have a valid order block, this fair value gap, if we were to form a swing, doesn't really make sense, right? So it's more so going with the trend, like I talked about, using the higher time frame. So if the hourly is trending up, right? So in this area here, why would I really be looking for swing highs when I'd rather go with the trend and swing lows, if that makes sense? That's kind of hard to explain just because it just takes practice and just kind of going with the flow of the market. So I can try to expand on that more, but it's really just aligning yourself with the higher time frame and then looking for a point of interest, right? So that's why my favorite thing to do is trading a day 3. So like, for instance, euro, right? Like trading this day 3 here and then aligning myself with a point of interest here. So you see we retest here, right? And then sweeps this out. So maybe this one fails. We can go look in the lower time frame there and see if that would have failed. And then this is actually, we can talk about intra-candle change in the state of delivery. So let's see here, go to 5. All right, we'll just It's not wanting to load. Oh, there it goes. So right here, we have a candle 2 closure, right? This is with our existing bias. And then now we're into candle 3. The one thing to notice is see how candle 3 went lower first. Generally, I like to see a little move higher to make the wick, but that would be a possible valid entry, right? That's the unconfirmed one. Now, if I'm waiting for an intra-candle change in the state of delivery, I'm waiting for these to be closed below. Right, now we just made equal highs. Now we have a new series of candles, and we're into the 4th one, right? So if I'm waiting for that intra-candle change in the state of delivery, I don't get into that, right? Now let's see. Let's say I did take that, then it would have failed, but now we have another sweep there on the hourly, right? Another sweep with our already existing bias, and in this case, we're still below 0.5 of the daily candle and below the mean threshold of that, right? So then for this to be a change in the state of delivery, where would we have to close below? Right here, right, within candle 2. But here, now we make a new high, right? So now this would be a new candle 2, so we have to let this form. So there we have a candle 2 closure. Does it have a change in the state of delivery? Yes. So then now within this candle, I would just be looking for a reach higher, respecting 0.5 of this, right? So I don't want to see it move much higher than that to continue lower, right? So then here, do we get a intra-candle change in the state of delivery? Not yet. We make a new high. So let's see. And then right there, we have that intra-candle change in the state of delivery, right? So then walking through this, right, we have our daily candle 3. We swept out the hour, right? And I showed you how if you wait for those intra-candle changes in the state of deliveries, we wouldn't have taken a loss there yet. Now right here, we get another sweep. This is a candle 2 closure, right? And then here now we have that intra-candle change in the state of delivery. So if I just take my entry here, I stop there, and then we can project out. In this case, I would use this low, right? You can see we have our targets there. So looking at, 2R, and that's our minimum. But if you go back out to the hour and just realize what's happening here, you can see our actual target is those lows, right? So if I have a runner, it gets pretty nice. But let's see if we get stopped out or what happens, right? You can see, then we get the expansion. So hopefully that answered your question about the intra-candle change in the state of delivery. All it's doing is I'm waiting for a candle, or right here, to form an opposing candle to then get on side. And really what that's doing is I'm letting the wick of this candle form, right? Because if candles expand, we have open, we make a high, expand, low, close, right? So even on the hour here, we'll clean this up. We'll go to the daily, right? This is a daily expansion candle. What does it do? Opens, makes a high, expansion, then it'll form a low and close, right? So hopefully that made some sense and answered your question on waiting for the change in the state of delivery. Intra-candle change in the state of delivery, what is that? All it is when whatever candle I'm looking to get in on, so in this case we have a candle 2 closure, so I'm looking to trade candle 3, I'm waiting for a change in the state of delivery on that candle or opposing candles to form. So you can see right here, do we form that? No. Do we form that? Yes, we form it here, so I could get in late here. In this case, I was just talking about the sweeps, right? So you can still get in before that if you have that bias, but the safer way would be to wait here, and then after this forms, then looking on the 5 minute and getting in, right? And you can see we form another opposing run right there. London, you could get in there, lots of different ways to get in something when you know its direction, right? Because the whole goal of this model is trading the expansion, right? When you get an expansion, opposing candles will be respected, or should be. Yeah, so if I wanted to trade a continuation here for that example, all I'm going to be doing is waiting for an opposing run to form, right? And ideally this forms, let's see if it did for this example. I like to see this form at the start of a new candle. We're on the wrong one. So like I'd like to see this close, right? And you can see how, what I mean by this is a new candle makes a high, right? And I like to trade the continuation when we get this new candle. So not trying to enter, see how this candle already expanded, right? So why would I want to enter until we open a new candle? Because this new candle gives us new range, right? So then when we open a new candle, we reach higher, right? We have a candle to closure, and then we close below here. Now that gives me my anticipation and confirmation that, okay, if we're going to continue lower, this high should remain intact. For how long? Well, at least the duration of this candle, right? Because that's how open, high, low, close works. So when this forms in here, I can enter, and this shouldn't be invalidated unless I'm wrong, all the way until here, right? And then even then, right, if we let this play out, that one just drops, right? So like if this was going to happen up there, I wouldn't catch this continuation. Why? Well, if I wanted to enter it, where would I have to enter? I'd have to enter there with my stop above that. I would rather let a high form, right? Similar to here, if I was just going to enter at the start of this, where would I have to have my opposing candle or my stop above opposing candles and 50% of that, right? Hopefully that makes sense. I want to have it above 50% because if price is going to come back up, it'll be respected in the lower half. Does it require a sweep before the close below? So if you go back through my opposing candles section of the course, I talk about the three things I look for to define opposing candles, and that's either 1, a sweep of a high, right? 2, a reach into a fair value gap, which this one had, or 3, a reach into other opposing candles. So I think, let's see if we can find an example. That would just be your propulsion block, right? So for example, it's not very clean, but let's say this retch into there, then the opposing candles off of that. It's not a very clean example. Actually, let's see if we can find the lower time frame one up in this high. There we go. Right. Let's see. We're gonna go deep into this little price action segment here. So you can see, right, when we have this little down close candle here, right, the whole series would be here. Shoot, I don't know if I want to talk about this because it might confuse some people, but yeah, we won't talk about it actually. But so using that series there, right, because the swing low to the high, right, then when we reach into that candle here, now I can define this as an opposing candle, right? Or not yet, or a potential opposing candle. What it needs is a close below. So you can see we don't close below, right? Still can't close below. Now we make a new high, right? So now I'm not interested in this. The potential one is here, right? Now when we close below, there we go. And if you also notice, this is once again candle 2, closure, intra-candle, change the state of delivery on candle 3. So I could either enter here or on the retest, look for 2R. The retest would have entered as well. And there we go, right? So not even meaning it for it to be example, but that would also be considered an opposing candle because it retched into other opposing candles. And in this case also took out, retched into this fair value gap. But that is what I use to define opposing candles. So I think actually a good example was NQ today on the 5 minute. Let's go hop into this. Someone took an entry off of this, which is great, right? I think they entered like this, or maybe, yeah, like that. Now I don't define that as an opposing candle. Now in trend, in a strong trend, these will hold, right? You can see that. But for me, I need either this next candle to make a high, right? For me to consider it, because then that would be a candle 2 closure, or for this to reach back into something, right? So you can see in this case here, this is where I would consider an opposing candle. Why? Well, it retched into a fair value gap here, right? versus these. So hopefully that makes sense. It's just because I want to mechanically define order blocks. Let me get back through the questions for Thursday. Let's see. When after a CSD, one asset sweeps a higher low, but the other retraces to 50% of the opposing candles or past respecting the swing higher low, would you consider it valid? I think that was NQ. No, I didn't really like that because let me explain why. So why I didn't like this move down here. We'll go to the hour. So you're asking because ES swept that high and then we reach above this. Now, although it does fit the requirements and did respect it, why don't I really like it? Let's pull up 0.5. Is generally if we're going to get that expansion down, what do I like to see? I like to see a move higher first, right? Trades away, then expansion, right? So when I see us trade lower first here, sweeping out this lows, this is what I talked about in my channel. When we formed this, then it's likely to get a retracement, right? And that's just less ideal for an expansion day, right? Expansion day, I want to see us trade higher here. It's fine to reach up there, then go lower, right? What really threw me off here was I didn't like how we traded lower first, then back up, then down, right? Expansion, I like to see trade higher, then down. So yes, this is still valid in terms of the model in the higher time frame. It can reach above it and still be respecting, right? I just need a swing to form in there, right? And then this swing is confirmed when it's closed below there, right? So I think if that answers your question, it is still valid, right? It was just the structure that threw me off in this example here, right? I like Euro, this is a perfect example of what I like to see structure-wise, is we just kind of drift higher, sweep out some highs into the point of interest, drop, right? That's what I really like to see. I don't like to see us, go lower, take out, and then go. Because if you think in terms of a daily candle, now this is a wick, right? If we're going to expand, it would look like that. So that's hopefully helpful. How do you find a higher time frame bias to trade without daily bias? So one way to do that is just looking at trend. So if we just go to gold, we'll just go to the examples from, where was it? Trying to think of when that was. Is that last week? Yeah, here. So like this is just a very good example, so I will use it. But if I'm trying to determine trend, I'll just use order blocks, right? So if we go and close over that, we should respect this low, right? Close over, respect the low, right? Just marking out order blocks. And what I don't like to see is in a trend higher, right? Or not, let me say this differently. In a trend higher, it's going to continue to trend until we get a bearish change in the state of delivery, right? So as we make this move up, where would we have to close below to change the trend? Here. Right here, it's very messy, but you can see because we don't make a new high here, we'd still have to close below here. Here we make a new high, so we'd have to close below this level to change the trend here. Here we reach back in, make a new high, so we'd have to close below here to make a new trend lower, right? And then we make a new one here, right? Oh, that's why I was thrown off. I was on the 30. I like to do this on the hour. Let me redo this because it's going to be way cleaner. There we go. So right here, that's when we shift the trend from bearish to bullish, right? And then from here, these down close candles are respected, right? Now going along the same thing, let's actually walk through it. I'm gonna put this example together a little better, right? So when this is right here, I am now bullish until we get a close below here. We'll just go candle by candle, right? And let me adjust this so it doesn't do that, right? And then, oops, sorry, I got ahead of myself. And wrong button. Then when we close over here, right? Then I'd like to see us remain bullish until, and in this case, since we haven't made a new high, it's still this low gets closed below, right? Now, since we make a new high, if we're going to continue this trend, right? We have that new order block. I'm bullish unless we get a bearish change in the state of delivery. Where would that occur? Right here, right? Now we reach lower. And then when we close over here, right? Now I'm bullish still until when? Until we'd get a new change in the state of delivery, bearish, or close below here, right? Still the same series of candles, and then that's where we close below. And that is where I was saying Monday's low, right? So you can use a lot of things. I'm gonna make a lesson on this eventually, just on defining order flow using order blocks, right? But you can see that's how I do it. So if you don't wanna use just daily bias, you can also just use the trend like this. But I prefer to, even if I'm gonna be scalping, have an idea of what the 4-hour or daily chart's doing, right? Because it just makes it a lot easier to define what direction you're looking for, if that makes sense. Sorry for that kind of botched example. That was a struggle. Go over scenarios, examples for the fractal model, especially on what 3 candles. Okay, yeah, let's go over your examples here. Let's see if I can put that in TradingView so everyone can see it. So just going over a few examples here. So this is a valid setup, right? Because we have a candle 2 closure paired with the change in the state of delivery. Now, how do I save myself from taking a loss here? Well, one, this is entering on candle 2, right? We're gonna draw this, right? This is candle 1. This is candle 2 because it made the low. This is candle 3. According to my model, I'm not entering on candle 2, so that would completely save this loss, right? Now, the next thing I can do is, okay, well, let's say I entered on this part of candle 3. How could I save that? Well, if candle 3 is starting to form, I can wait for that intra-candle change in the state of delivery, which when it reaches lower here, I wouldn't want to see it much lower. Why? Well, that's 50% of this wick. And then I'd want to see it close over here. So if it went like that, then I could get in on this expansion, right? But what does it do? It invalidates. So that's a way of staying out of that one. Let's see. And if it's helpful to walk through examples like this, we can always do that. I kind of enjoy it. In this example, let's see, copy and paste it in there. Just kind of go over it. So in this example, I wouldn't have gotten in this trade because one, here is candle, let's annotate it again. Candle 1, candle 2, candle 3, right? Now I need to wait for a change in the state of delivery in candle 2, which once we get, we've already taken out this low, right? And without any retracement or swing, and it's already reaching, down into these lows, it doesn't really interest me, right? And then when price comes back up and it's not respecting 0.5 of this, then it's likely to go reach for that high. So I personally wouldn't have gotten in this because I need it to close below here before it enters, and it did that there. So let's see. I'm just reading this real quick. If the draw is, so the question is here, it made swings in both directions. Oh, I see. He was saying, so what we just went over was a swing low there, right? And then the same one. So a draw in both directions. So if you can frame something in both directions and you don't know where it's likely to go, that's usually a good indication of sitting on your hands, right? Another thing to notice here is where would we, if we're downtrending here, where would we need to close over to indicate a bullish trend? we'd need to close over here. So this deep retracement is still bearish to me until we close over there. And that's just protected highs and lows. Let's see. So I'm going to grab another example here, then read his question, and we will go over it. So the question is, the candle 2 CISD occurs at the open of candle 3. Do we count it as candle 2 or candle 3 CISD? I've had it happen a few times. So let's just go over this, and in terms of the flowchart, if you guys can pull up the flowchart while watching this, that will be very helpful. I can't right now, but I kind of have it memorized, so we will go through it and we can walk through it. Now let's mark it up. This would be our candle 1, right? Candle 2. And if we notice, candle 2 closes inside. You can't see it here, but this is candle 1's high, right? Candle 1's low. So I'll just draw it out for you. Looks something like that, right? So candle 2 closure. Now the question is, since this candle 2 closure didn't get this change in the state of delivery within candle 2, how do we approach that? Now, if you remember the flowchart, it's asking, do we have a candle 2 closure? Yes, we do. So now we look at the lower time frames to confirm it. Do we have a change in the state of delivery here? No. So then we wait to candle 3. Now, within candle 3, once we get this change in the state of delivery, all we're looking for is an intra-candle change in the state of delivery, right? This is now a valid setup. I don't have to wait for a 4th candle here, right? It's just once this confirms the change in the state of delivery, then I can look to get in with this expansion, right? So here, once we go reach up, make a candle 2 closure here, can get in there, right? Or could also wait for the next opposing candle. And you see how that starts, makes the move up, closes below, right? So that's your open, high, low close. The only thing I'm not a fan of here is taking out that, right? So hopefully that made sense in terms of the flow chart. It's once you get a candle 2 closure here, I'm just looking for this change in the state of delivery. If it hasn't happened yet, then I wait or I refrain from taking trades until that's happened. Once it happens, then it's all set for me to get in on that expansion. Those are just there because that's the filters I use to keep myself out of bad price action. Okay, here's an example. I think these examples are good because they're like real scenarios where stuff isn't perfect, right? So we can learn from those. So you can see here, what did we have? We had a candle 2 closure here. Do we have a change in the state of delivery on candle 2? We do, right? Because we took out that high, close below. Now, one thing, once again, that can save me is waiting for that change in the state of delivery on candle 3, right? So let's see if I can draw a box here and we'll walk through it. See if I can turn that up. Shoulders and back. Okay, we'll just do it like this. So if you see this candle right here, I'm just gonna hold it. You can see it makes a run higher, and that's fine, right? Because it's respecting 0.5 of this wick and reaching into these opposing candles. Now what we'd want to see is the next candle, or the one following, to go close below it to get that expansion. But you see the next candle then makes a new high. So now we have a new candle too, right? So with this, I have to wait for a new closure, right? Because we made a new high, and this is a new candle 2, I'm not looking to get in on this because I don't trade candle 2. So now we have a new candle 2. When that closes, do we have a change in the state of delivery? Yes, we do. So then here is where I could look to get in, right? And in this case, since we made this high, right? Made the high, closed, you could look to enter right at the open there with your stop here, right? That is a possibility, or you just miss it, and that's fine. You will miss trades. So hopefully that was helpful. And then last example, and this is a good one to go over, and then I'll get to everyone in chat's questions, is can I use an SMT here for the change in the state of delivery? And yes, you can. So within candle 2, if I have a change in the state of delivery here, I can use the change in the state of delivery off the SMT to have that change in the state of delivery, if that makes sense, right? So instead of having to wait for here. Now, a lot of times I still just prefer to wait for this, right? So then once we close over, right, just waiting in and getting in on this anyways, right? So you get in the same way, unless we were to, you know, form some sort of entry in here. But I just wanted to clear that up. In candle 3, do you always wait for the wick to form? So we just talked about that intra-candle change in the state of delivery. You don't have to let it form. It just does improve the hit rate. And then kind of the clues I look for to see if an order block's going to hold. We'll just go back to this example here. If this order block's going to hold, I want to see what? I want to see the mean threshold of that hold, right? So either the opening price or mean threshold or the lower half of that. And you can see that's the common theme with everything I do, the lower half or upper half. Now, if we're going to do that, this candle right here would have had to reach above this, because it did, and then close back in. It would have to form a swing right here if it was going to go lower, right? But since it took out, then it doesn't respect this anymore, and I wait for more information. So really, it's just, I can use information of swings forming at the spots I would expect it, right? So if we reach up, we can just go back to Euro for this example, right? You know, once we open up this new day, I'd want to see swings form or respect 0.5 of that and 0.5 of the daily wick, right? So marking that out, 0.5 of this daily wick right there, right? So I'd want to see a swing form in this lower half here, and usually can overlap a little. That's like the sweet spot. But here, right? This is where I'm looking for a swing high to form. So maybe I do get stopped out in here, or if you wait for the change in the state of delivery, it doesn't. But that's how you can kind of anticipate where those swings should form, if that makes sense. We already went through this example in the lower time frame, so I'll refrain. But hopefully that helps. Have you noticed a pattern between traders that are profitable and ones that aren't? So I find the biggest pattern between traders who are profitable and those that aren't are those that just follow rules. If you can follow rules and not go on tilt, it's honestly not that hard if you have an edge in the market. What I find is most people, they can't accept a loss. So what happens is, let's say they have a 50% win rate at 2R. That's profitable. But what happens is they take that one loss they have, right? And instead of just ending it with -1R, right? Like that, they go on tilt and they turn that into like -10R, right? It's a lot harder to recover something like that than it is 1R, right? Because now you need 5 winners at 2R just to cover that. Versus this, you could have a whole nother loss and one winner would cover it at 2R. So I think most people just lack either one, discipline and risk management, and just not going on tilt or revenge trading. And if they don't, and let's say they have that, they're normally break even or just below it, and their curve just kind of looks something like this, right? Because they lack an edge. And in that case, they just need an edge in the market, right? So that is what I'd say. The average RR of my trades, it's just around 3 generally. And mainly due to I take most off at 2R and then have some runners. More top-down breakdowns of potential trades in recent market and show older ones from journal. Yeah, I could do that. I normally am sharing more analysis in the markets. It's just this week I was flying from South Africa to Spain, so kind of a long time and took it out of me. So you'll see more of that in next week's. Is it possible to use M5 and M1 swings? Yes, you can. It's just not, I just prefer not to. A lot of times what happens is, let me explain this, is you identify the correct area for a swing point on the 5 minute to form, right? And that ends up working. But what happens is you'll get like a nice little swing that forms in here, right? And you try to take that, and then you just get ran out before it actually goes, right? So you're right on the idea and everything, and you take a -1R instead of winning just because you're trying to get in at this high, right? Versus, once again, trading this little continuation that follows this high. It's a lot easier. So it's definitely possible to refine from the 5 minute to 1 minute. I just find that with the model, I just stick with the timings I found that to work for them, and I just keep it at that, right? The only thing is when you refine too much, you're gonna get down and mess up, right? So for even just like this example in Euro, let's say, you know, I'm just trading this hourly and, you know, taking an entry on this with my stop above this, right? Because if it reaches above 0.5 of this and of that, it's gonna fail. So let's say I was taking a trade like this, right? You know, 2R to those lows, great, right? But instead I was trying to refine it down into here, right? Then I get in, okay, it's going my way, stops me out, then goes. When in reality, I could have just, you know, gave my stop a little room where the idea is actually invalid versus trying to just maximize my profit, if that makes sense. Hopefully that is helpful. Align yourself to the trend. So the main thing with daily and H4 is you still want to be trading with the trend, right? Or with the daily closures, right? So like an example on Euro here, there's no real sense in trying to long this until we get a change in the state of delivery on the 4 hour, right? And so that's what I mean with the trend, right? So we'd have to close over there to get the change in the state of delivery. Here we never took out a relevant low, so I don't consider that one. I guess you could, but it's very weak after sweeping the high. We'd have to close over there, right? That made the low. We'd have to close over here to be bullish, right? And right here, this is where, you know, you can first think about, you know, possibly getting in a long is after this, right? But what do we notice about that very next candle? It does not respect 0.5 of this. We'd want to see a swing form in here to move higher, right? Then we go break a new low. So it's still bearish. Right now, Euro is still bearish unless we go and close over this, right? So that's how I determine trend. And so with that, it's, if we're trending down, I'm only looking to short swing highs, right? I'm not looking to buy swing lows, if that makes sense. Hopefully that is helpful. How do you know where price is going to draw next? Really, that's just my higher time frame closures and trend, right? So right here on Euro, we get displacement down, change in the state of delivery, right? Displacement. If you just look at the phases of price here, or just price in general, and keep it very simple, which direction are the big candles going? Let's keep it very simple. Which direction are the big candles going? Here we have a big candle this way. All right, it's still bullish, right? As we've continued here. Big candle met with big candle, or in more advanced terms, expansion met with expansion is a reversal. Here we get displacement, close below. But do we get a big candle green? No. Big candle red? Yes. Nice close? Yes. Are these big at all, or displacement? No. Big candle, no. Big candle. So that's like the easiest way to determine trend, is really just look at, you know, just keep it very, very simple. All right, I'm gonna check the chat again. Looks like I missed a few things. I was using the wrong framework. Should I wait for the hourly displacement failure? 5 minutes. Sorry, in the recording, I'm just reviewing or reading something. Yeah, hopefully I answered that. If I didn't, shoot me another message and I'll go. Can you take screenshots of this candle indicator for Twitter, or like you did for you mean the settings, or what do you mean exactly? All right, let's see. Here's a good example, 2 of the opposing candles you talked about. All right, cool. We'll throw it up in the so people can view it. Right, so you can see when we get this expansion, price is going to respect those opposing candles. And unless we close below these up close candles, you see that? Up close, that's when trend is going to fail. So a way to view it is I look at a couple things. If price doesn't respect the mean threshold or the middle of opposing candles, it's likely to fail, right? Now, if it fails, it needs to close below here to then continue lower, right? Does it respect 0.5? Yes. If it didn't, does it close below here, right? So that's just how I use order flow. Great example, Ryan. See when it doesn't work. Yeah. Honestly, what we can do is I'll set up a little channel in the Discord this week, and what we can do is I can just have you guys put a bunch of examples in there, and then for next week's stream I can just go through them one by one and talk through them. So just review trades with you guys. The flowchart is in the circle. It's in the course. Should be section 23, and that will walk you through. Is this current opposing run we have valid to take a short NQ? So I'm not trading before NFP, personally. You're talking about the 15-minute. But that is what I like to see in a continuation, right? So with a continuation, it's the same thing. We get an opposing candle, and this is actually an ideal formation, right? We get an opposing candle. Does it reach an important level or point of interest? Does it reach an old high? No, it doesn't sweep anything out. Does it reach a fair value gap? Yes, right? So now with a closure below this, right, I can consider trading this following candle. Now with the 15-minute to 1-minute pairing, I can drop down here, click on the 1, right? And you can see we're already significantly low in the trend. So there's a few ways I can look at this, but right here, we make a move higher. And this is actually a good example of where we don't make that exact high in this candle, right? So this is our candle 2 or 3. I think those are equal highs. So it's kind of both. But you can see we don't make that exact high in this candle, right? But we do make this opposing run into an important level, close below, right? So if this is going to continue lower, right, I'd want to see what respected. 0.5 of this, right? And then what else? I don't want to see a close over this, right? So that's just the order flow stuff we were talking about. So with that idea in mind, right, if I see this opposing candle, right, I could look to enter with a candle 2 closure here, right? Could do that. Does it hit 2R? Doesn't yet, right? Or when this candle forms here, that's another opposing candle because it came off this order block, right? So then with this, I'd want to see, is 0.5 of this respected, right? Okay, it is. Do we close below those up close candles? Yes. So if price is going to trend lower, I'd want to see what? It respect 0.5 of this right here and close where? Not over this, right? So that's kind of a little walkthrough. The one thing I don't like about this is that, where are we? We're pretty significantly lower, right? And just in through lunch, right? Normally lunch on a trending day gets an opposing move before normally lasts a little longer. It normally goes until the end of lunch and then lower, right? But that's just how I would look at that price action, right? Does that make sense? Hopefully, right? We have equal lows here, but did we form an SMT? We formed an SMT there, right? So hopefully that makes sense. Another thing you can do is, we won't talk about that. We'll keep it to the model. Okay. Settings of my candles. Yeah, so I'll talk about that. So this is the pro version of the 2 degrees, right? And so on each one, I show 4 candles because what does that allow me? It allows me to see the candle 1, 2, 3, and 4, right? Because I'm only looking at candle 3 and 4 normally, right? I have my normal chart colors on there, right? I offset it 0 and I made it small because that way it doesn't take up very much of my screen, right? And then I only show the open line and open time. So what that does is it shows these vertical separators and then the opening line for the current candle that is forming, right? And then what I do is I have this set to remember the interval that I'm at, and then I save it as a template. So each one of these up here, that'll be the 1 minute, that'll be a 3 minute with the 30, 5 minute with the hour, right? It shows each one. So if we go back to the 1 minute, did we go and close over? No, not yet, right? So it's still technically bearish. We do have the SMT on the lows, but my Mac is going to die. Oh, yo, give me 1 second. I'm gonna pause the recording and plug it in. All right, we are back. Thank you. I only have one outlet because in Europe, none of my chargers work because the outlets are different. So I only have one adapter right now. I feel like I'm late for executions. Think maybe it'd be good to look at the top of the hour for power 3. So within this model, you want to check price at the opening of each new candle, right? Because if I'm gonna have a candle 2 closure, right, I'm only interested once that candle closes. So why would I just sit here and watch price this whole time when I can just instead take a look at 1230, 1245, in this case, taking a look at 1300, right? Because I want to see how each candle closes, right? So if I'm trading the hour and the 5 minute, I don't care to look at the chart all day. All I'm looking for is at 10, look at 11, look at 12, look at 13, right? Because if I'm going to be taking a trade, it's going to be after a candle closure at that time, right? Hopefully that makes sense. So that's like the cool thing about the model is when I'm looking at the daily chart, I'm only looking at the end of each day, right? So we just got the new candle closure on the 15 and 1. So let's go take a look at how it closed, right? Right? So equal lows, more interested in ES here, right? So if ES holds, right, it would be from where? 0.5 of this wick. We'd form a swing low here. Then we'd want to see a close over there. That's like the bullish scenario there. I don't really like the equal lows, but does that makes sense? Like it only really matters at the close of those candles. So why sit on the charts all day when you can sit on them for 6 minutes a day, you know? Maybe it's stupid. How do you define like on the hourly time frame, candle 1, candle 2? So if you go through my course, that's going to be very helpful. But all I'm talking about with defining candles 1, 2, 3, 4, we'll talk to, we'll go to Euro for this one, is candle 2 is always going to be that high or the low. So if we're looking at this swing low here, since this is the low, that's candle 2. The one before it is candle 1, and then obviously 1, 2, 3, 4, right? But you can see since this starts to fail, because if candle 4 is going to continue, it's going to respect 0.5, doesn't. Now we formed a new high, so that's candle 2 bearish, candle 1, candle 3, candle 4, 1, 2, 3, 4. So every time we have a swing point, that's a candle 1, 2, 3, right? So candle 1, 2, 3. 3 doesn't close well, right? Forms a candle 2 in the other way. 1, 2, 3. But that is all explained in the course, which will be more helpful than my little trading view drawings. And there are no stupid questions. You guys can ask anything. Experience and data with the fractal model. What lower time for entry has the highest hit rate? I find most people would do best, and I do best with the hourly to 5 minute. And the reason for that for me is just because I find the hourly works the best with the daily time frame, which is where I derive my bias, right? So those two pair well together. And then I like the 5 minute with the hourly. So if I'm going to try to trade the daily time frame with an hourly structure, 5 minute entry, that's kind of where it all blends together. Any chance you can just speak your thought process on getting in early on fractal versus chasing? I don't really like to chase. I'd rather try to be early than chase something honestly. Well, actually, I take that back. Most people would be better off chasing than being early, because then at least you're going with the trend. I don't really like either of those, honestly. I just like to follow the model as it is. You'll realize RR is important, but hit rate is pretty important psychologically too, because when you win more, right, you take less losses, and losses tend to affect people psychologically more. So it looks like NQ then took that low, yeah. Let's see. Yeah. Right. So now you can see if we took the low, where would the change in the state of delivery now be? If we're going to continue trend lower right here, have to fail to close there. But you see how we're starting to build up? A grinding trend down will build up low resistance liquidity. So, but what I'm saying is, sorry, I totally lost what I was saying. Oh, if you have like a very high hit rate, right? 2 versus 3R isn't gonna matter when you have an 80% hit rate, right? To you psychologically. It matters more so if you have like a 40% hit win rate, right? Because then you're, 6% off of break even at 2R versus, 15% off at 3R. So I would rather not be early and stop out multiple times and catch a huge move than get a nice move and win a lot, if that makes sense. Just in terms of PA. How do you deal with missing moves? You're always gonna miss moves. Like you gotta realize like you can't catch them all, and that's fine. I think you realize you don't really care about missing moves anymore when you realize how many opportunities there actually are. There's so many people feeling FOMO for missing a drop today, where it's like, okay, well, I could have caught that, I could have not, but I'd rather follow my rules, I think it's just, you have to accept that you're gonna miss stuff. It's just how it is. If you can't accept missing stuff, then I don't know what to say, because you are going to. If you check out my TT lessons chat, I have all the indicators pinned there. The one I use is a paid version. I think it's like $40 something a month, but there's lots of free alternatives in here. 50% is from wick to wick or body. So I use wick to wick on my 50% of the whole candle. And that's just something I've done. Obviously there's times where it doesn't really make sense to use that. I don't know if I can find an example, but mechanically that's just what I do. That's how I keep it mechanical. So I always use the whole entire candle, right? And if it's a candle 2, then the wick, just the wick to that closing or opening price. So vertical lines, that's once again built into the indicator, right? So if I click on 3 minute, that's gonna put lines at every 30-minute period because of how I have it set up here. But once again, there is free alternatives in the Discord pinned. What are the W's and X's for? Where? I don't see W's and X's. Oh, all of these. Oh, I can walk you through those if you guys want. So I have like templates for all the charts I want to look at. So normally this is my weekly profile template, right? So what this does is this allows me to see the formation of the weekly candle with the daily candles and then the hourly. So since today is Thursday, I'd go up to my template that says week Thursday. And then what it will do is it puts the correct number of candles there, right? So it was already that way, but let's say I was going back to week Monday. So like just the start of a new week, it would have one candle, one daily candle here, right? Or week Tuesday, right? And so then it would be 2 candles here because that would be Tuesday, right? Obviously it's not going to look right now, but if we went back to, Tuesday forming, right? Then it's correct, right? So that's what the W's are and why there's so many W's there. And then obviously the week, that's just a week one. These are all the ones for the specific time frames. This is for, in here I always use the 15-minute with this for my daily profile. That's all that one is. So yeah, those are just all templates so I can be quick. Did I not? No, I resumed the recording. Oh, you scared me for a second. Why you gotta do that to me? No, I did. All right. When you say it doesn't respect 0.5, do you mean close over? So when I say respecting 0.5, we can go to, what was a good example that we were looking at? It was on the daily, yeah? Wait. So like right now, right? I mean, we can just take a look at ES here, right? If we're going to get a continuation higher, right, for like my bias, right? If we're going to get a continuation higher where I'd be bullish for tomorrow, I would have been looking for it to respect 0.5 of this candle, right? So now it could reach a little lower, would have to reach into this, right, and go. But since we're currently not respecting this, or by respecting it, we're not forming any swings in this area, right? We're just dropping through it. That makes me look towards the lows for tomorrow, right, or into today. So with that, right, if we get NFP to manipulate higher, right, if we leave these lows, manipulate higher, then go lower, and where can we look for that? Well, we can just use, in this case, since it doesn't have a large wick for a candle 2, using 0.5 of that, right, wherever we close, right? So it's the same thing that I use on every time frame, and that's how I get my bias, right? So like tomorrow, I'm most likely going to be bearish. I was just waiting for a close to say that, because then I can actually define it out, right? Do we have a change in the state of delivery here? Yes, we do, right? And this will be a little cleaner, not even on the, I'd rather use something like that, but, right? So hopefully that makes sense. Lower time frame entries like OB entries, CSD and swing. Oh, so what does the data say in terms of the best entry? It's going to be an ideal formation. There's a reason why I named it ideal formation. So we'll just go into Ian's examples, because that's essentially like all he trades as well, because he's figured that out. Just finding a good example here. So the ideal entry for me, like ideal setup, is a candle 3 on the higher time frame, candle 3, and then ideal formation. And what do I mean by ideal formation is what I was just talking about, that intra candle change in the state of delivery. But when that is made, where we have a candle 2 and then candle 3, once again, validates that order block, right? So then entering on that continuation with my stop there, right? So it can form on candle 2 as well, where I can take the open to candle 3. But letting that form, that's like the highest hit rate, is candle 3 on the higher time frame, candle and lower time frame ideal formation. So that is what I have found to be the best. You need a video on those templates? I mean, yeah, I can definitely make something for that, or we can just go over a quick one. So for example, let's say I was building a template for the hourly here. I'll just throw in one that's not the same, right? So right now this is my template for the 4 hour, but I want the hour. So what I'd want to do is, what time frame is paired with the hour? The daily, right? I want 4 candles. That's fine. So that is fine now. So you can see now we have the daily, and it's set up to how I'd want it. So with this, now what I'd do is I'd go into here, save indicator template. And what I want to do here is I want to remember the interval, right? Because if I want to click on this, I want to go to the hourly time frame. So it'll remember that I'm on the hourly. And then I'd want to name this, we can just name it test 1 hour, right? So testing the 1 hour template out. And then what I do is I have all these templates in here, and I can just star the test 1 hour. And so then now, whatever time frame I'm on, let's say I'm on the 15, I want to go to the hour, test 1 hour. Now I have the hour time frame and the daily up. So that's what these ones are, right? So 4 hour 15 or hour 15, right? So I have all those built out, and then if you star them, they go up here. So I never have to look in indicators or anything. I just use all these up here. And then if I want to get rid of it, I can do there or just delete it. So, all right. And if the candle 2 closes very strong, you use 0.5 of the whole candle. Yes, so that's in the course. That will be the candle 2 closure. I think a small wick, no wick, something like that. I can't remember what I used as a heading there. But yeah, I'll use the full candle on that one. Can you look into the channel again? Yeah, I'll take a look. If I want to go M15, M5 without going to the lower time, because I almost never miss unanticipated bias, but I never get satisfied with the lower time frame. I mean, yeah, you could do that. You could honestly try out M15 to, like an M3, because an M3 is going to give you, oh, nice. So you can see, did we go and close over this? No. So still bearish, right? And then what happens is we reach into another opposing candle, close below, just another that. So then once again, this is another way to trail stops too, is when this was forming here, we'd have to close over this to be bullish, right? Which we don't. Now in here, because this is just kind of more consolidation, I'd remain there. If this was better structure, then it couldn't close over this, or it would be bullish, right? So you can see, this is kind of a live example of where what I just talked about in the little order flow lesson on the hourly with gold is how to actually use that, right? So, and in this case, I'll show you guys something, how you're not supposed to like cut through candles is where was the high that was actually made here, right? So I personally, yes, I'll look at this as an order block. Why? Because of the opening timing of this, right? Since this is the open of a new candle, then it made the high. That's why I'll consider an order block. Normally I would ignore that, but a way to view it is since it closed there, now this high should be respected. And if it's going to be respected, 0.5 of those up close candles should be respected as well, right? So you can see 0.5 lines up there, as well as that intra candle change in the state of delivery. And I'll consider that one because of the timing of it. Now with that, if we're going to have another expansion candle, and once again, where do we wait till 315, right? Because you expect expansion to open high, make a large body, close near the lows. So, yeah, if you rewatch the stream, it will make a lot more sense talking about the intra-candle changes in the state of delivery. Yeah, so trailing stops, I mean, we can just give an example of, like, let's say I was short in here, right? It's just exactly what I was going to talk about is once we close below and validate new opposing candles, that's when I can trail my stop. Right, so let's say I have my stop there, right? Now we reach higher, close below, can have my stop there, right? And I'll draw this out. Here, this isn't a very great one, but close below, stop there. Here we reach higher. When do we close below? Right there. So now I can have my stop on this high, right? And then with this intra-candle change in state of delivery, I can have my stop there. And really I can, once I get like way far or closer to my target, I can become more aggressive with my trailing if I want to. But that's just how I trail through, is I just wait for closures to validate order blocks, and thus a high shouldn't be hit, right? Hopefully that makes sense. And I was wondering why this didn't update, and that's because we were on the wrong template. So that makes more sense. Once again, what we were talking about with the 0.5 of candles in expansion. Yes, this one retched above it, but what did it do? It formed a swing there, right? 0.5 of that. Retch above it, yes, formed a swing, that's okay, right? Hopefully that is starting to make sense. And you'll start to realize that if we're in a trend down, it's likely to trend until we get new higher time frame candle openings, right? So if we're going to trend down on a 4-hour candle here, it's likely to continue that trend until the end of the 4 hours. So when could a new, trend occur, or when could we move higher, or, make a new trend or more new direction? is when we get a new candle. So I like to focus on the higher time frame candles for this. So it's like, yes, at new hours, but new 4-hour candle, right? So then it's more so focused on, let's move that, is right here at 1400, right? Because if we're going open high, we'll make a low close near the lows, right? So, all right, let's see if there's a few more questions. Oh, did I get distracted on your question? Sorry, my brain moves around a lot. Not going below the 15 when you use a 15-minute swing. Yeah, for sure. Like if you just want to trade, that's the thing is, let's say I want to trade the 15-minute and I don't want to go lower. That's fine, right? With the higher time frame narrative or trend, we sweep out here, candle 3 closure. I can just trade the opening of this candle, right? And there we go, right? Like that's fine, right? Like I can do that. Like even here, right? Reach into opposing candles, we validate a low, right? So I could enter in here, or I let this swing form, right? Right here. So this isn't a great entry, but open there. Do we even hit 2R? No, we don't, right? So that one like wouldn't make sense because your stop's too big, right? Because how big is that stop? Yeah, it's a 125 point stop, so that's quite large. 100 point stop is still quite large, but this one makes a little more sense because price hadn't already expanded out of it. Quote of the day before we go. I'm gonna go to the beach. I don't know. I don't have quotes. I'm not a quote person, I don't think. What is an order block? Liquidity or inefficiency in the market only does 2 things. I don't really like to argue with people because I find it useless, because why try to prove them something that they genuinely don't care to change their mind about? For me, an order block is nothing more than we're trending in one direction and we make an opposing candle. Like, I don't really try to make things complex. Like someone was asking me, what is an order block? Like, what is it actually? And I was like, I don't know. They just make me money. Like, it's not that deep. Like, don't make trading super hard when it doesn't need to be, right? Like, you don't need to know everything. Like, if you look at my model, you guys probably, for those of you that have joined now, you probably came in using like 20, 30 concepts, you know, just going through your mind like, oh, do I take a breaker block entry here, but I have a fair value gap? Oh, but what if it reaches all the way back up to the mean threshold of this? What if it does this? You don't need that much, right? You just take the guesswork out of it. You make something fairly mechanical, which is what I've done. And then you just do that. You keep it simple. So example here, if we're going to continue trend, it's not very clean, but, right? This is where it's like, remember what I was talking about with the lower time frame structure here? So we have a lower time frame order block like right here, because we went down, up, there, that made the high, and then this was very choppy and it dropped. But like, let's see, right? So it's like that stuff's just practice, but yeah, now I think I'm getting bored. So why do you not draw the position at the open of candle 4? Why did you draw the position at the open of candle 4, not candle 3? So you were talking about, whoa, I need to undo that. I don't know what I did. So you're talking about this example here, why I drew the position at the start of candle 4 and not candle 3. Because in this case, it's not a candle 2 closure, right? Since this candle closed out here, mechanically with my model, I let another candle form. Since this one agrees or just like validates it, right? It respects the 0.5 here, closes below this low, nice bearish candle, right? Basically your classic expansion, right? If we go to a 1 minute, it's gonna have a nice, actually, yeah, let's do it. We got time. 1 minute, right? You can see it makes that nice opposing run at the start of the candle, makes a trend down, right? Makes the low, retraces back in, right? Obviously chops around, but all I'm trying to say is because it's a candle 3 closure, if you go take a look at the entry section of the course, it'd be candle 4 entry, stop on candle 2. You can adjust this, you know, once you learn the model mechanically. The reason I say candle 2 is it's mechanical, right? Because that I'm not going to make something that's not mechanical where it's I'll just go in a little rant real quick. The reason I didn't like watching ICT stuff is because he would be like, oh, in this case, I'm going to choose this candle as my order block. And then right after he'd be like, this one. And it seemed he always just chose the one that worked well, and that didn't really sit well with me. And I was like, I need something that's mechanical, right? And so you notice everything with this model, right? It's the same every time, right? There's no, okay, well, it made this slightly different formation here, so I'm going to use this candle. Like, no, I'm always going to use the exact same. So that's why it would be here, not there, right? Even though this is a nice bearish candle, according to the model, waiting for that. There are times that you can enter on candle 2, and if you notice, that will generally be the entry if 930 has manipulation, right? So not really here, but let's see if we can find an example. If 930 makes the manipulation move, the foundation model will be that entry, right? So that first order block. It's not very great, but like that will be the entry. Wait, see 930, yeah. So that is where, you know, candle 2 can make sense. But it's just when you have something mechanical like this, you're gonna have like sacrifices, like you're gonna miss certain moves to be mechanical. Just looking back at notes down, was this a big topic of the model? So yeah, we can go over this. So this is like before I taught anyone the model, all I showed to someone was the 3, like entering on the candle 3, right? Or once the swing forms. So they found a trend, entered on the swing that formed, and then just took it, right? So yeah, so that was like part of it. Should I just do 1 hour, 5 minute fractal on indices, oil and gold? Or, so that's really up to you. And so, like I said, when you have something mechanical and you choose timeframes, you're gonna miss moves, right? Like you'll be sitting here on the 5 minute, right? And you'll see someone take a 1 minute setup, right? Like right there, right? Let's say we took that 1 minute continuation trade. And the 5 minute is not gonna give that. Why? Well, because the only way to get on the 5 minute was up here, right? And in this case, you don't really like to trade after that large expansion. But if you get it on the 5 minute here, which I know some people did, so we can go over that. We have a candle 2 closure. And then here, right, because we have a new candle, we make this opposing run. They're treating that as the wick of that higher time frame, right? So then when this closes below here, right, they're trading that open high low close of the next hour. But let's say I didn't get in there and I missed it, right? And I'm on the hour, I'm not catching this, right? Because the model catches the candle after a reversal or the one following. It doesn't catch these continuations, right? Versus the 15 minute, you can see, made a little swing there. It would catch that, right? Doesn't catch anything in here. Catches that one, possibly that one. So you just have to realize you're gonna miss moves, right? So you just have to choose what's gonna be best for you. If you try to catch everything, you're not going to. So like if you try to watch 4 different assets on, you know, 2 different time frames or 3 different time frames, it's just going to be a lot mentally on you. So I would say it's best to just choose a time frame you like. You know, you can walk through different ones, right? So you can set stuff for yourself. Like in a trend day, I will look for 15-minute swings to form, right? In a strong trend, I'll look for 15-minute swings. Other than that, I'm only going to trade the hour to 5, right? But you're not going to catch everything. So hopefully that was helpful. It's probably not very helpful because that's a personal decision you have to make for yourself. Like for example, Ian, right? You see a lot of his examples because I gave him a little example channel. He mostly only trades the hour to the 5 minute, right? That's what he trades. But you also saw he took a 4 hour to 15 minute trade the other day. And why is that? And for his requirement is it was choppy and the lower time frames weren't clean, so he zoomed out a little, right? So you can set these parameters for when you're going to use certain time frames if you want, or you can just stick. Like for personally, I just like the daily hour and 5 minute, right? I like using the 15 minute for like daily profile, but like I like the hour and 5 minute. That's just what I like. How do you deal with price moving so fast after a news market open? Sometimes it just taps an M1 OB or 15 and goes to... So a lot of times with that, it's more about the narrative. Like I know a lot of people were expecting a retracement up here, right? They were, oh, it retched below here. Why isn't it retracing back up into a premium? And you guys realize now why I don't want it to retrace back up into a premium. Because if price is going to expand, it's going to expand. If price retraces during an expansion, that makes me think, okay, is it an expansion anymore? No, right? So a lot of times you're going to miss moves, but one way to, or another way to look at that is, we'll just go to a 3 minute, for example, or let's see if we can find one that didn't get retested here. Maybe 1 minute. I don't like that. All right, we'll just go 3 minute. Let's just say it didn't retest here, right? What you can do is if you have all the narrative lined up, right? Just entering when that candle is forming that order block, right? Because when this closes, I now have the anticipation that this is a protected high, right? So it shouldn't be hit. So I can just take my entry and yeah, it never retested, right? So a lot of times it doesn't retest and then it just goes. But like once again, let me just draw it out. This model, what it does is it lets the reversal form and then you catch this continuation after, right? A lot of times at 9:30, if that's the manipulation and it just goes all in one, you're gonna miss this move, right? Because this will be a candle 2 that takes out both sides of the range. Where it does well is, let's say 8:30 gets that manipulation and then we come into 9:30, we can catch that continuation because it fits the model, right? Once again, with following a model, you're gonna miss stuff. Like that's just how it works. So actually on SPY, if you want to, you could look at SPY hour. So if you go to SPY or QQQ, since they open at 9:30, the new hour candles will be on the half hour flip. So, if you're using SPY here, right, your 10:30 is going to be the open of a new hour candle, right? We'll go up here, right? No wonder it's not working. I have it up on the wrong template. It's like this reversal candle there. That's the new hour candle here, right, at 10:30. So that's one way you can view it. It's going to be a little different because it's very gappy there because you have your overnight session. But that's why like the 30 minute, I include the 30 minute. Why? Because the 30 minute is going to be the flip of the new hour candles. All right, I think if you were using long-term swings, yeah, monthly and daily is what I would do. Or like stocks, I like the monthly and then daily. The one thing with stocks is they gap a lot, so if you're trying to use hourly stuff like that, it can be a little bit confusing. So, okay, let's see here. Yeah, I think we got to most of the questions, or all of them. If you guys have any other stock market one, I don't know if I'll ever make a stock one. I think stocks, maybe I will. Maybe I'll make a little section or something. Backtesting session next stream. Yeah, I'm trying to think of how to do it more. Let me end the stream real quick, or else we're at 1 hour 30. All right, see you everyone on the stream.